Do you want to fly kites around your garden or launch a rocket into space? You either have a load of little businesses that you're sort of tinkering with in your garden, or you just focus on one thing, you then give it all the energy and it propels into space. It'd sort of be, I guess it'd be sort of a bingo card of like all of the different property strategies, and as we go through, I probably will have ticked them all off. So I've got a fair amount of experience with that stuff on the good and bad side.
Tell us about that experience of when you kind of realised that that bingo card wasn't perhaps the best strategy.
I think you have to, at some point in your journey, you've got to decide, right, this is who I am, this is what I'm going to do. And to be exceptional in this business, I can't do 10 businesses. I can't do 10 different things. One of our mentors, Dan Hill, talks about the wealth hierarchy, which is the bottom level is cash flow, the next level is profit, and the top level is assets. And you have to work through that pyramid from the bottom. You build your foundation of cash flow. People talk about 10,000 hours sort of to get like really good at something. I've heard other people talk about, it's not really about the hours, it's about the repetitions. So it's not 10,000 hours, it's 10,000 repetitions of doing something. The more you listen to sort of wealthy people, is like they do one thing that's usually pretty boring for ages, get really good at it, make loads of money.
So if you're finding yourself a little bit distracted, a little bit overwhelmed with chasing shiny pennies, jumping on the latest strategy, comparing your journey with others, then this episode is definitely for you.
Building wealth through property isn't about chasing big deals and paydays. It's about owning assets that make money for you consistently. But figuring it all out on your own, that's where most people get stuck. That's why we created this Property Life membership. It's everything we wish we had when we started. Expert guidance, real-world case studies, and a private community of investors actually doing deals, not just talking about them. So you could spend years trying to piece it all together yourself, or you could plug into a system that's already working for our community. Check out our membership page at This Property Life. Everything you need to know is right there. Success is a team sport. Come join in.
In this episode of This Property Life, I'm joined by the ever insightful Murat Haykir, co-founder of Moorview Property and a straight-talking voice in the world of HMO and property investment. We're talking about something every investor wrestles with: chasing shiny pennies, jumping on the latest strategy, comparing your journey with others. It's really easy to lose focus and lose momentum. Mo's going to share how he's learnt through experience to cut through the noise and to find his own version of success and build a thriving business by not just staying in his lane, but dominating it. So if you're finding yourself a little bit distracted, a little bit overwhelmed, chasing all the new things that are going on in property, then this episode is definitely for you. I'm your host today, Sarah Blaney, and we're going to get straight into it. Welcome, Mo, to This Property Life.
Thank you for having me. Great to be here.
So yeah, I've sort of hinted that there might be a little bit of experience coming through on this discussion. We've spoken obviously about all the struggles that you go through as you progress through property investment and the journey and all of that sort of stuff. But tell us how you got started and when, and we can go through that journey with you. Heads up before we start the show. This Property Life is more than just a brilliant podcast. We are also a thriving network community. We meet online every single week with different property experts and in real life every single quarter to share war stories and insider tips. And the best bit is you can get this absolutely free for 2 months. So head to the link in the description and start networking smart.
Yeah, okay. It'd be sort of a bingo card of like all of the different property strategies, and as we go through, I probably will have ticked them all off. So got a fair amount of experience with that stuff on the good and bad side. So we started in property in 2010, myself and my business partner James. We were actually put into uni halls together, and we lived together for a couple of years. Then we went and did industrial placement years at uni. So we went off separately and did our sort of a year in industry before our final year of uni. The couple of years we were living together, obviously we were friends. We were like, this property thing, like there's something there. James was actually doing construction management and the environment. I was doing business and economics. And we sort of looked at how much we were paying our landlord, and we thought, looking at property prices and the rents we were paying, we were like, there's got to be something here. So during our industrial placement year, we actually bought a property just before auction, which we didn't know was a strategy, but it is. And we renovated it. We created an extra bedroom in the loft had sort of been partially converted, but not properly. So we converted that. So it was 4 bedrooms. And then in our final year, we lived in it with 2 friends. So myself and James, 2 friends, they obviously paid rent, which covered the mortgage and the bills. We managed to, that first one, we managed to just get like a residential mortgage, which was sort of part of the journey at the time. So we went into sort of the mortgage broker and we were like, they thought we were a couple buying this property together and stuff like that. So anyway, that was all good. And that was our first HMO, which we didn't know it was called an HMO. But that was the first HMO we had. We kept that for a couple of years. We went off and did graduate placement schemes, and then we actually sold that property, which was a 4-bed, to buy the next one, which was a 5-bed, because we thought, we hadn't done any property training, and we just thought that's how you do property. Like, you sell a property and you get a bigger one. And I'm not really sure where that ends, but that we thought that was the way you did it. We didn't know about refinancing or anything like that. So we sold that, bought a 5-bed, and then just continued there for a couple of years, or for a few years, while we were still employed. James was working in construction, doing construction management, and I was working in banking. I worked at Lloyds and then at HSBC, sort of doing project management work. And we carried on buying properties. We started working with investors, so initially with sort of friends and family, and maybe we'll talk about it later, but like, investor relations is like the rings on an onion. So you start with the people that are closest to you, and then when you build credibility and trust, you then start working with people with sort of more degrees of separation from you. So we started with friends and family, invested and stuff like that. Actually, I've still got the business case that I gave to my mum for buying, for getting the deposit for that first property, which was like 10-15 grand. And I was like, I'm going to sell my windsurfing kit. I'm really committed to this, all that kind of stuff. Carried on doing that, buying properties alongside our job. And then James jumped in full time in 2015. We'd done some property training by then, done some mentorship, and we were like, what are we doing? We've got to just like go full speed at this, which maybe we'll talk about later, but like, isn't necessarily the right strategy. So we can chat about that. And so James jumped into property full time in 2015. I carried on working, and then I basically paid him through my limited company because I was contracting. So he still had a salary, so he could still get mortgages and all that kind of jazz. So, and then a year later, I jumped in to work full time in the business as well. That was 2016. And then since then, growing the HMO portfolio, our own properties. We set a lettings business because we weren't getting the sort of service that you would expect from managing property. Like, some of our properties, the agent was making as much as us after, like, the occupancy wasn't good, and you take off all the costs, and then you're like, well, we made 400 quid on this, but the agents made 400 quid as well. I was like, how does that work? So, and then couple more years from there. In fact, actually, like the next year, we then started to get into development. So we were quite active in the PIN network, the Property Investors Network. We helped out with the local meeting in Plymouth, and then we met our business partners, Phil and Carl, and then we set up the development company with them. Well, we started doing one project with them, which is a care home conversion into 10 flats in Saltash and Cornwall. And then from that, we were like, well, that's gone really well. Let's do a development company. But alongside that, we also then did, because when you drop off from like earning quite good money to like working in property full time, you realize how important cash flow is. And we were just like, God, we need cash flow. So we started doing rent to rent. We started doing service accommodation, and basically doing whatever we could to sort of bring in some money so we could actually pay ourselves properly. Started doing developments, and just sort of grown since then, grown our own portfolio. We then started doing sourcing for HMOs, sourcing, refurb, and lettings. So the sourcing business fed into the refurb business, which fed into the lettings business, which was really good for growing the portfolio, our own stuff, and also for investors as well. And then we've set up an office. So we have our own office, which we lease from our business partner who has it in his SAS. And then we sublet some of the offices out, and we have our office there. So we were then into like a workspace sort of service offices business as well. Along the way, we've done like mentoring and stuff like that. So we've done a bit of everything, but now we're sort of
really accelerated, haven't you, since that early days of university and happening upon this nice way to get your mortgage paid and then build a little bit of capital. And then, as you say, you both dived in, but you're both young, still are very young, and had the energy to do all of that. And you went for it a million miles an hour.
Yeah. And, it's been 10 years this year that James jumped in full time, and 10 years next year that I did. But we've covered a lot of ground in that time. We've learned a lot. I think, the last few years, we've probably started to sort of hone in on what we're actually really good at. What do we like doing? Who are the kind of clients we want to work with? How do we want to like work with investors and deal with debt? What's the long-term stuff? We've now both got young families. So then there's that sort of element of like, okay, well, I don't want to be, when I jumped out of work full time, or started working property full time, I would go down to Plymouth and like stay in a B&B for like 2 or 3 days. And obviously didn't have kids then. And it's fine, it's part of the journey. But then now you're like, well, I can't even imagine doing that now. If I'm away for a day or like an overnighter, I'm like, what am I doing? Like, I don't want to do that. There's more important things to like, and actually I don't need to, because if I'm doing that, then I'm wasting a lot of time traveling. I'm not actually getting, income generating work done. I'm not like working with clients and stuff like that, growing the business. So yeah, it just changes, the focus changes, but we've covered a lot of ground in sort of 9-10 years. Yeah, definitely.
Yeah. So I mean, you mentioned like the bingo card of property, and it can feel like that. And I think I resonate with exactly what you're saying, in that we both started probably about the same time, about that 2015 mark. And we started off pretty much like, HMOs, good cookie cutter. And then you do sort of, I don't know, doors open, lots of doors open, and you tend to walk through all of them all at once. And it's not always the best strategy. And I think we found that, myself and my husband, who we invest together, we've gone off and we've done this, that, and the other. And yeah, I think, when we spoke, it was very much like, yeah, done that, done that, done that. And actually, you come back to a position where it works and it's efficient and it follows your actual goals. But tell us about that experience of when you kind of realized that that bingo card wasn't perhaps the best strategy.
Yeah, and I think it's a difficult decision when you're growing and when you're sort of young in business and stuff like that, because you hear these things like, I think Richard Branson's like, just say yes, say yes to everything. They're the opportunities, and then you can figure out how to do it down the line. Like, fine, yeah. And you don't know what you're going to like and what you're going to be good at until you try some things out. So I think there's definitely got to be a period of testing to see which things work. But you've got to give things time as well, and you can't like test everything and give it time, because you don't know which one's going to be successful. So at some point, I think really anything can be successful. Like there's huge businesses, and whether you want like a massive business with loads of staff and loads of profit, or if you want a lifestyle business, like whichever way you want to go, you can make any of those strategies work. Like if you are the best service accommodation provider in the UK or in your area, like you're going to make loads of money doing that if you are the best. The other things I didn't add in as well were, I actually wrote a book and started a podcast as well during that time as well, which at the time fits into like the investor relations piece, and it's like it's credibility and it's networking, and then we did an event for the book launch, and that was great because we brought a load of investors and a load of people we knew, and it grew our network and stuff like that, and that was all really good. So I do look at stuff like that as, was it a distraction at the time? Yes, but would I be where I am now without that, because of the connections I made and the people I met and the investors and stuff like that? And actually, a lot of either our refurb clients, investors that we work with and stuff like that, have probably more from my appearances on other podcasts than our own podcast we ran, because I tapped into going on podcasts of people that had much bigger audiences than what we did. So we do it and we get like a few thousand listens or whatever it is. But then I go onto a podcast that had like multiple thousands, and then I did several podcasts, and then that opened up more doors to investors, and we had refurb clients that came in, and I was like, "Oh, how did you hear about us?" And it was like, "Oh, well, I heard you on this podcast." Then that fed me into like looking you up, and that feeds you in. So it's hard to say like don't do anything, because I think you have to just sort of almost like throw stuff at the wall and see what sticks. But I think you have to, at some point in the journey, you've got to decide, right, this is who I am, this is what I'm going to do. And to be exceptional in this business, I can't do 10 businesses. I can't do 10 different things. And the other thing is, there's loads of property courses which are like, they'll just teach you all the strategies, like, and I've done like the progressive stuff. And our very first event we went to was the multiple streams of property income. And like, we took that as like, you need to have multiple streams, like you need to do everything, because the more you do, the more money you'll make. What it actually is here's all the strategies, try them out, decide what you're good at, what's going to work well, what you enjoy, and then hone in on that. And I think the diversity of business, the more you listen to sort of wealthy people, is like they do one thing that's usually pretty boring for ages, get really good at it, make loads of money. Once they've got the money, they then diversify their income streams, because then that's risk protection. So they're looking at stocks, they're looking at crypto, they're looking at property, they're looking at whatever it is. They just spread the money around. And it's mixing up those things, I think, with it's like, you don't do that to get rich or get where you want to go. You do that once you are to de-risk, and complicating those things just means you end up doing a load of stuff.
And it's the absolute difference that you've absolutely nailed it there, because you spoke earlier about how the journey went from, the developments, and obviously cash flow is so important. And to plug that gap of cash flow, you'd gone into rent to rent to try and build the cash flow up. Which was a diversification, but it was plugging an issue in another strategy. And what you said there is actually, if you focus and do something really well, once you're really good at it, you can use the assets that you've created to then, do other things. And it's the point at where you come to it, isn't it?
Yeah, absolutely. And one of our mentors, Dan Hill, talks about the wealth hierarchy, which is the bottom level is cash flow, the next level is profit, and the top level is assets. And you have to work through that pyramid from the bottom. You build your foundation of cash flow. And to be honest, we probably, well, no, we didn't probably, we definitely jumped to do profit strategies and long-term equity strategies, like large scale portfolio building for ourselves, using our own money and also investor debt. We probably jumped to that too early. So we were then dabbling and playing in cash flow profit. So profits being things like doing HMO refurbs and you make 10, 20K per thing. Profit being like doing a development where you get nothing for 3 years and then you might get a few 100K or whatever profit. And then equity being the sort of long-term portfolio. You might only make a few percent on your money, but then the capital's appreciating as well. And I think jumping around in those, you're really supposed to complete a layer. So like you complete cash flow or you get it to a point where it's like pretty decent, then that buys back your time to be able to do the profit. Then you use your lumps of profit to buy your long-term like equity plays. And we definitely jumped about with that, which then means you make some money. Like we made some money on developments, but then it plugs a hole in the lettings business because it's not doing as well, or in our own portfolio because we've taken our eyes off the ball on like a refinance or some occupancy issue. And I suppose maybe not the last couple of years, but before that, it was characterized by like making decent money in one area and it then just plugs a hole in another area. And then overall you're like, well, I've paid myself, but I've not really like, and I've got a portfolio, but I don't feel like I'm like smashing it. So I think that order is really important. I think a takeaway for people would be, really focusing on cash flow. And I mean, because you increase your lifestyle, your cash flow increases, I suppose you never really feel like you have, like, inverted commas, completed it. But you've got to get a good way along that. So the worst thing you can do is a sort of feast and famine of development where you're like completely skin and then a development pays off or you get a large lump of money in and then that sort of pays back the time when you weren't doing well and also forward funds the next bit. And you're just like, it's just like up and down, sort of like feast and famine. You want to have that base level of cash flow. So you're like, I don't need to touch that development profit or whatever the profit strategy is. When it comes in, I can invest it. I can either pay down debt or I can buy some assets. You're not using it to like pay the mortgage and buy a shop at Waitrose or Lidl or whatever. So that's been a massive part of our
moment that was that light bulb moment for you guys, or was it like a progression towards just being on a wheel of being too busy but not actually really making it in one area?
I think, to give him credit, Dan Hill, who's one of our mentors, like when we started doing Property Entrepreneur, his training stuff, that was probably the point at which we had the pain, but we didn't know why we had the pain. Like we didn't know why it was like the frustration or like the funding one thing from another once one thing pays off and stuff. And I think he then got these models that it was like, oh right, yeah, that's why, because the profit comes in and then we're using that to pay off this, and then we've got the portfolio, but we've got debt on it. So we're playing in the three areas. I think working with him and the model, he's got an analogy of like, do you want to fly kites around your garden or launch a rocket into space, which is the analogy of like, you either have a load of little businesses that you're sort of tinkering with in your garden, or you just focus on one thing and you then give it all the energy and it propels into space. So I think when we started doing that training, and I'd done a couple of years on his board, which is like his highest level mentoring thing, that put a framework around why it was happening, but it still didn't instantly mean that we changed, partly because there's a bit of ego in it, I suppose, where it's like, oh, well, actually, no, like, yeah, that's fine. And that works for some people, but we're different. So there's a bit of a delay to doing that. But then there's also a delay in like, okay, now I completely understand it. Ego's out the window, but we've got all these businesses. Like we're not going to be able to change course. It's like steering an oil tanker. Like you can't turn it around that quickly. So there is going to be a period of like shifting our focus into different things. You can't do it overnight. You've got staff, you've got premises, you've got contracts, you've got clients, you've got investors. You've got that maneuvering of switching or like focusing, I suppose. So like starting to cut the cords on some of the kites and bringing it down, and then you can then really focus on putting more fuel into the rocket. So yeah, it wasn't a light bulb, but it was definitely starting to do that, understanding the frameworks of why it was happening. And then now we're in that transition of like, right, we're really focusing on less things. And to be honest, like all the times that we've done that, we made more money. Like, that's just the fact of it. You think that stopping things, and I suppose that's the worry when you're growing, is that like saying no to business, like who says no to business? Like, how arrogant do you have to be to say no to someone, or to an opportunity? Who do you think you are? But actually that's exactly what you need to do. So yeah, it was been a bit of a progression, I suppose, over time. The other thing I sort of struggle with, I suppose, a little bit is I love doing training. I love doing mentorship, as in being the mentee. I love mentoring as well, but more like being the mentee and learning. Like, I love the learning bit, because it's like you can shortcut your journey and use the learnings. You don't have to go through the same mistakes. You can use the learnings from other people. But there's that balance between like just learning and learning and learning and then doing. And it's like, that's what I've done with the property entrepreneur stuff. I've done like a year of doing it, and then just a year of mentoring, and then a year of just implementing, and then a year of mentoring and then just implementing. So I think there's a danger that you just get into, because even really good mentoring, you still hear other people's stories of what's going really well for them. And even if it's not overtly like, you should do this strategy, you're like, oh my God, I've been working for this long to make this much money, and it's been this much of a headache. This person's just bought this commercial property and done this like weird contract
Because it
thing.
always feels like that everyone else has just very speedily got to grips with it all.
But what you don't understand is, well, actually that person's just sold a business, has had this like liquidity event, and was able to do that. Or this person's actually spent 20 years in the commercial property industry, and that's why they have these connections, that they can do this. And so, and if they wanted to do, say, something like with HMOs that we're doing, they might not understand it in the same way and be able to implement it as quickly. So yeah, I think that's another thing I'd say, mentoring versus doing. Like, I think if we just carried on doing and just said no to doing any more training and mentoring, I think we'd probably still be in that same loop. But at the same time, if you just always do training, then you never do actually implementing, you never get better, you don't understand what you're doing. And also, it can be expensive if you're just constantly like spending loads of money on training.
So how did you decide which strategies or which elements of your business you were going to wind down, and which you were going to focus on?
There's probably two parts. There's probably like gut feel of like, what do I enjoy the most? Who do I enjoy working with? What feels like it's working the most? What's taking up the most time? So there's all this like, I suppose, the gut feel around how much time am I spending? What am I doing? And then it's just looking at the numbers, and it's just being really like honest about, which is a whole nother challenge, because for a few years we didn't have really good management accounting. We didn't have really good bookkeeping in place, not to the fault of any of our team, but to the fault of our, like, we didn't like prioritize it and say, this is important, we need to have the monthly management accounts, we need to have balance sheets looking good, and all of that stuff. And now we've got that more for the last few years. And then it's easy to make those decisions, because you're like, well, I know how much time I'm spending, I know how much money we're making, I know how much I enjoy it, I know what the risks are, I know what the downside, the upside is. And then it becomes a very easy decision, because it takes the ego out of it. It takes the stories that you've been telling yourself about stuff out of it. And it's a much easier decision. And your gut is usually right, but if you've been telling yourself stories about things and why you're doing them, then you can trick yourself. Yeah, and you need the sort of raw numbers to have some objectivity on it.
So that led you to more of a focus within HMOs.
Yeah, basically, just focus on because we've got like a fairly decent portfolio, and it's like, well, if you can actually, rather than just keep buying more property, if you can just focus on optimizing the portfolio that you've got, then there's a load more money there, and it sort of de-risks it. And the lettings business, just focusing on that, and focusing on the growth of that business as well. Yeah,
I guess they're quite complementary as well, aren't they? So it is an easier decision to keep the lettings business, because I'm sure that can be a headache at times with the way the industry is. But because it complements that asset building, it works.
Exactly. And what I like, I think, the whole, like, people talk about 10,000 hours sort of to get like really good at something, and I've heard other people talk about, it's not really about the hours, it's about the repetitions. So it's not 10,000 hours, it's 10,000 repetitions of doing something, or whatever the number is. And I think what I like about trading businesses and lettings business and rentals and portfolio and stuff like that is it's just the same thing, which is, on the one hand, is boring, and is why people, have wandering eyes and want to do other things, because that's really exciting, I'll go and do that. But you get so many repetitions. Like there's people moving in and out of properties every day. There's maintenance tasks every single day. There's finance. There's everything. There's investors. There's just everything every single day. Which means you just get good at it. And if you focus on it and you can improve it, you can see the tangible improvements. And I suppose for developments, it's such a long development cycle, and it doesn't align as well with like what I like to do in terms of iterating and just and improving and getting better and working with the team. Developments is like, it can be 3 or 4 years end to end. And even if which we were at one point, sourcing like multiple deals a year or starting multiple projects a year, it still can be like 6 months a year between like, right, we're sourcing this property and we just started on the next one. You're like, right, what do we do to source that one and stuff like that. So I really like that, like repetition, because I think it feeds back to like how you get good at something is just through to the point at which it's so repetitive and inverted commas boring that's why other people quit. But that's when you get through to like, that's where the pot of gold is once you do that. Because if you think about whether you sell the business or whether you continue just to move into sort of an ownership position and bring in more managers to do it, which I think is the direction we're going more, and it's only got value, and you can only step away at the point at which it is like running like a sort of well-tuned engine, you might say.
Yeah. Well, I think it's one of those, isn't it, where whether you're doing trading or whether you're building your own portfolio, the only time when you really feel the benefit of all of this is when you stop.
Yeah.
And there is a bit of an addiction as well to it. So I was thinking, I don't think I'll ever stop.
Yeah.
But I think if you've got that goal, so if yours is building that lettings business with a future aim that it could be a sellable asset as well, you know where you're off to, don't you? You kind of know why you're doing it and why you're getting up every day to put a couple of hours into that business.
Yeah, exactly. I think James and I are more of the mind of like, we need to get it. I think it's either the E-Myth or Build to Sell, like one of those books. That they're both like, you do exactly the same things, whether you want to sell it or whether like we do, we want to just like hold on to it and have it as a cash flowing asset, but obviously spend less time in it because we want to spend more time with family and stuff like that. It's the same things. You need to have the management structures. You need to remove yourself. And someone said like, you always sell your business. You either sell it to someone else or you sell it to effectively yourself, in terms of like you just sit as an investor, maybe like chairman of the board, rather than the operational, like the managing director. I think
have you had to, when you've been going through that process of thinking, you and James, where you want to go, is there a point where you've kind of gone either together or in your own head, what will I do when I am in that position where it's running itself? Because sometimes we're defined by what we're up to every day, and it can be hard, can't it?
Yeah, I think that's exactly right. And especially with the lettings business, if you sell a lettings business and you use the funds to like invest in something and get 10%, because of the multiples on sales of a lettings business, like your income's going to drop. So like you're paying yourself X amount because you're actually working in the business as well as being an owner. When you sell it, there's obviously got to be margin for the new buyer to make a profit on working on owning it. So even if you get a payout, you've then got the tax and all the other things to consider. And then if you use that money and you invest it, you're like, great, so I've got nothing to do and I've got like a portfolio that will pay me. Well, the nothing to do is a problem, like you said, because you're like, what will I do? And also the income, probably somewhere between after tax and everything's taken into account. It depends what return you get on actually investing the money, but you're probably looking at like 50, 60, 70% drop in income, probably maybe 50, 60% drop in income. So if you're earning X amount, it's going to drop by 50, 60% at that point, which you could say is, well, that's fine because you're not trading your time for money now. That's completely passive. But if you have got a family and, I live in London and it's expensive and you can't necessarily afford to make that trade as well. But you're never going to get out of that because the ratio is always going to be there, because if you can invest at say 10% and you get like a 3 or 4 times multiple on the profit of the business, then you're always going to have that discrepancy. Which is why it seems to make more sense to just systemize it, bring in more management, and then we can sort of keep the asset maybe, years in the future, look at selling it. But then then we've bought our time back, but still got income coming in.
Yeah, yeah. And what do you think, what would you spend your time doing? Because obviously you love learning. You've already sort of intimated that's a key part of your
Yeah.
personality.
We've only been in it like 10 years or whatever, but we have learned a lot, and we've done mentoring before, and I really like that. And that's fairly, if you're going to exchange your time for money, it's a fairly good way of doing it. I don't necessarily want to do like whole scale property training events and stuff like that, because I think there's a huge amount of pressure to put bums on seats. Like I've seen that across a number of organizations, that's their main, there's so much focus on just getting bums on seats into that, feeding the funnel, as it were, which I don't really like necessarily that part of it. And I think if you're doing mentoring, whether it's small group or one-on-one, you've got people that are like really going to take on board what you have. Maybe they're slightly further ahead in their journey. So, what you're saying is a bit more, you're not just like, obviously there needs to be a place for like teaching beginners, but I don't want to do that. Like that's not really, doesn't fire me up, but mentoring stuff does. So I think for income wise, something like that, I think my wife's quite interested in starting a business, something in food. At some point, we like always talks about like buying a farm somewhere and having maybe some accommodation. We were thinking about doing weddings, but probably not so much that now. But buying a farm and having like a restaurant there or some accommodation, something like that. So I think maybe the business side will go to help her with that. But yeah,
So it sounds like we
it's a
can't
hard
take the
one.
entrepreneur out of you, Mo.
No, honestly, I'd be so bored. I have to do something. So yeah, I don't know. It's a really good question. I've not really thought enough about it because we've just sort of been heads
Because you're
down,
not
sort
quite
of just
there
cracking on.
yet. But yeah.
Yeah, no, definitely not there. And even really, like I wouldn't say like obviously our son's in nursery, he goes like 10 hours a day for 5 days a week, which he loves, which is good, but also gives us an opportunity to work and stuff. I wouldn't even say that like if I didn't have to work, I would just like hang out with him, because I don't actually think that's good for him or me. Like, do you know what I mean? I think you need to have the time where you can go on holidays and you can look after him when he's ill and and spend quality time together. But I don't think that's actually, I think it being I wouldn't like homeschool, or I wouldn't like do anything like that.
I think as we said at the beginning, you've got to know what you're good at and know when to keep in your own lane, isn't it? So
Yeah.
so it sounds to me as though you guys have got an awful lot more to be getting on with, because you kind of enjoy it and it's the passion at the moment. But I think it's been really good to follow that, that awful word journey of what you guys have done and how you've literally put a cross onto every bingo square that you had, and then ripped up the bingo square and just got you one strategy. But sometimes you do have to live that and live the pain of it, even when you didn't realize it was pain, to actually come out the other side into something better.
Yeah, and a guy that was sort of like one of my line managers / mentor at Lloyd's when I was there, and he said, which I don't, it's not his quote, I think it's from someone else, but he said like, you don't want to get to the top of the ladder and realize it's against the wrong wall. I suppose I've always thought about that like if you focus too early before you've tried a few things, but now saying that, if you do that and then you focus on it and you become really successful, there isn't really a wrong wall, because if you're successful and you can sort of cash out of it, you can just go and do what you want anyway, and then actually maybe the money
key
is
is
taken
the
off the
success,
table.
isn't it? It's how
Yeah,
far
you've
off the
just
wall
got
you
to
got.
focus on it. Yeah, exactly. Focus on it enough you're more likely to find the wrong wall and not even get to the top of the ladder if you are doing loads of things.
So
I guess.
what's your advice for people? So people at the moment in property, whether they're aspiring or active, there's lots of new buzzwords and new little things that are coming along. So supported living is the next big essay in terms of everyone's, and it's a lovely one to talk about because it's the win-win of everything. So lots of people are looking into this as a strategy, as well as smart hotels and all of that sort of stuff. How do you keep yourself focused and not being distracted? What are the key things that you have to have at your disposal to keep yourself in line?
That's a good question. I think know what you're good at, and I think when opportunities come up, like assess them against, is it in the direction you want to be going, which is obviously quite hard to know at the time. Because I think the other thing is with with waves that come in, if you are riding a wave, which you could also say that like a wave is also like a shiny penny / distraction. I suppose it's knowing the difference between a shiny penny and like a fundamental shift in the economy or in the world and stuff like, you could say SA was a wave, but actually apart hotels is already booming and is probably like a really good thing that's coming in. Supported living again is the market growing? And I suppose one of the things that we've found is looking at like what's the total addressable market, like what is the total market of something, and is the pie growing? Because you're only ever gonna have like a slice of the pie, even if you're the best of the best. Like you're only ever gonna have like a part of the pie. So you want that pie to be growing. You don't want it to be shrinking. So you don't want to be getting into like newspaper advertising as an example, or like even like physical billboards or something like that. Things that have had their day and now they're on the decline because you've got a 10% or 5% share of the pie, and that pie is shrinking. Your business is going to be shrinking. You're just like swimming against the tide. So I think it's trying to work out if the opportunity is riding a wave, because we've done it. We've done it with commercial to residential conversions. So we've done it with a lot of like listed buildings that other people didn't really know what to do and couldn't touch. Like we've done a lot on that. And obviously working professional HMOs has been the biggest one for us. And like high end, and taking more of like the stuff that we've seen in other areas of the country and in London down to Plymouth, and now there's a lot of people doing that sort of high end mezzanine platform. So like the average rent in Plymouth is like 550, 600 quid for an ensuite room, and some of them that we do and other people are doing it as like £1,000 a month now. So it's like breaking the boundary for that, but that's like fundamentally the way the market is going, and so we rode that wave, and it's very, very easy to do business in that environment. So it's trying to work out if the opportunity is in a growing industry. So I think those things that you mentioned probably are. And then really it's like I said, anything can work. So it's just trying to focus on like, you can't do that many things. And I think it's trying to take a bit of the ego out of like, I can do everything. And like, isn't it really good? I'm busy. People used to ask that how business was. And for the first, probably for 7-8 years, I'd be like, yeah, good, really busy. And it's like, well, that's, the most successful people you speak to don't start the answer with, yeah, I'm really busy. Because if you're busy, you're probably doing low value tasks. You're probably doing the delivery rather than strategic thinking, growing the business, income generating tasks, that kind of stuff. So, but then again, it's part of the journey, isn't it? You've got to be busy to start with. I know that's not really an answer to your question. So I suppose focus on what you're good at, know yourself, know where you want to go, look at that opportunity that comes in. What does that look like in 5 or 10 years, like down the line?
That's the thing that's key for me. And I think you've definitely got something with that macro idea. So looking at the demand of the new strategy, is it, doing basically a SWOT analysis on it, isn't it? If you're going to go real back to the old days, and looking at that. So looking at the macro, and then I always like to, and it's something I've had to really learn over the last couple of years, and something I'm really focused on now is the micro bit about me. So I'll ask myself 2 or 3 questions about, is that serving this goal of mine? And if the answer is yes, without hesitation, then I'll go forward. If it's a no, obviously I'm going to stop. If it's I'm not sure, but there's something about it, you've got to dig deeper, haven't you? But I think you've got to, so that you're not a busy fool. You've got to ask yourself, is it going to serve me in that 5 years time when, this is my goal for 5 years? Is this helping me get there?
Yeah, absolutely. And a couple of things on that. I think you might also get like, it's not this new strategy or this thing that I'm looking at isn't necessarily, and it could also be not a new strategy, but it could be analyzing what you're currently doing to work out what to cut and what to go forward with. It could be that actually it doesn't exactly align with my micro, like my life bit now, but that's just that's like a 2 or 3 year part of the journey, and the bit after that is. So for example, like if I'm doing something new now and it means time away from home, like that's not what I want to do. But if I have to do that, which we are doing with some bits now, like if I have to do that for a year, 2 years to then allow me to get what I want in the future, then it's part of that. I think the other thing is being really realistic about the numbers, because it's like, most people don't work back from, so I don't know, for easy numbers, like you want to make £10,000 a month, right? And you want to do it with, and you want to hit that in 5 years, right? And you want it to be from a lettings business, for example. Work back from like, okay, so what does that mean in terms of lettings business runs at 30-40% margin or whatever? So what does the turnover need to be? Okay, how many properties is that? How many landlords is that? How many properties are there in the local area that I want to work in? Actually, to hit that number, maybe I've got to have not just a little like local business, it's actually got to be a regional business, or it's got to be a national business, depending on what it is. And actually be realistic about, I think most people, me included, underestimate the size of like the top. How big does the top of the funnel have to be? How big does the market have to be? And how much marketing and how much effort you have to put in at the top to get that out the bottom.
Yeah.
And I think working back from that, there's a bit like some of the mentoring that I've done. It's like, oh, well, I want to have 5 properties. Okay, well, 5 properties in this amount of time. How much investor money do you need to do that? How many viewings are you going to have to do? And then when you start doing viewings and you're like, oh, well, I've viewed 20 properties and I only made 1 offer and that offer wasn't accepted. Okay, we'll double all of those numbers. And it's like, it's a bit cheesy to talk about like Grant Cardone and say like 10x everything, but it's sort of like the whole principle of that is like, you just got to do more than you got to do more than you think you've got to do to get it. And I think when people don't get the result after doing 2x what they originally thought, they're like, they have a plan, it doesn't work, they're like, right, let's double it. And they're like, it still doesn't work. Maybe this is just a dud strategy, or I'm not the right person or whatever. But actually, I don't think you can say that until you've done 10, 50, 100, whatever. It's just, the whole thing is just a ridiculous amount of effort and marketing and time and conversations and everything. Yeah.
It's not a highbrow, is it, property? It's not highbrow at all, but it is hard.
Yeah, for sure. But it's great. And I think the other thing is we're always, we're always focusing on like on income and stuff like that. And I think fundamentally, if you get into property, no matter what your age is, if you get into property, like it is going to go up in value over time. It is going to be an investment. As long as you look after it, there's going to be a whole load of people that get to, retirement age and are relying on pensions or workplace pensions or state pension or whatever, or have nothing. And actually you're going to really like, and when things are hard, you can make yourself feel better by thinking like, well, actually, let's zoom out, because it's very easy to zoom in on like the day and like the shit that's happening and stuff like that. And if you just zoom out and be like, right, let's just roll forward 20 years. If I didn't do anything else and just sort of maintain what we've got, what does it look like? And that can make you feel a bit better about it as well. Although you can't make that like justify not doing
but it's when you need to put a little pick me up. It is nice to do that, isn't it? But I think we've covered some really, I think, some things that will resonate with lots of people. In that lots of doors are open. Which one should I go through? I'll go through all of them at once and spread myself thin, and where that leads. And sometimes it can lead to good stuff, but I think there's always a mechanism of looking at data. I think data is a massive one. Looking at the data, don't lie to yourself and don't let your ego get in the way, which I think if there's an investor out there that hasn't said that they've suffered from all of those, I just don't believe them. I think it's too easy in our industry to let ego and noise dictate where you're off to, but you've really got to rein yourself back in. And sometimes actually you just got to learn from experience and do that, make a mistake, and then realize why a more simplistic and clarity-led focus is the one to go for.
Yeah, absolutely. And you just got to, I think again, I'm going to butcher it, but it's in good to great. And it's like, you're going to have failures and you're going to have losses and you're going to have all of that stuff. The key thing is to make sure that dip like down doesn't take you like all the way down. Like you can have dips down and then back up, and your journey's going to look like that. But you just got to make sure you don't. I love quotes. I love listening to them, but I'm really bad at repeating them. It's like, it's basically, don't bet the empire for a pot of gold. It's that kind of thing. It's like, if you've got something and then you're like, oh, cool, it'd be really good to have that. Don't bet everything you've got for something that you don't have and don't need now. And that's the same as like that sort of journey of like, you can test as much as you want. You should expect to make failures. And actually you want to make them. You want to have failures because that's the learning. But you just don't want them to take you to wipe you out.
I would have helped you out with those sayings, Mo, but I'm one of those people that actually takes 2 sayings, combines them into one, and then thinks that was the saying. So we would have led ourselves down an absolute rabbit hole.
Yeah. I'm sure I've done that. But yeah, and I think that's why training and mentorship's so good, because you can advance your journey. And I think you've got to take that, but the most important thing with it is that you've got to implement, and you've got to implement the learnings. Otherwise, what's the point in paying for it?
Yeah, absolutely. I think action is everything. So if you're listening to this podcast today and thinking this resonates a little bit, I've been guilty of being distracted, then hopefully we have brought you back into focus, and you can, just sit back, look at what you're actually doing, get some data together, analyze where you're off to, look at the macro, look at the micro, and maybe it will just stop you chasing off in a direction that wasn't your direction to go in. And if we've done that today, then our job is done, Mo, and we go away smiling.
Yeah, absolutely.
And I would love to chat to you again and talk about high-end HMOs down in Plymouth, because I think that's a great thing. HMOs, go back 10 years. That's how I started properly in property, doing HMOs. And an HMO will never look as good as it did the day you finished it, and it's top of the market. And then the next day, someone else has finished their HMO and it's top of the market. So it is one of those where, you're ever decreasing down in terms of your product because someone else has come along and put something new and funky in. So I'd love to chat to you about how you guys keep on top of that, especially in, in a place down south, because again, I think that's an interesting thing. So we'll have to have you back, I think.
Yeah, absolutely.
But in the meantime, if people want to follow you and see what you're up to, what's the best way?
Yep. So probably Instagram, Murat Jeffrey Haykir, which is, I can spell it, but presumably you'll link it.
We'll link
it somewhere.
So yeah,
it's quite a long one. And then I have actually done. Oh, another thing I didn't mention, which was part of which I actually really enjoy, but it is quite a big time commitment. Is I've got a YouTube channel, which I've not really updated, but it actually was doing quite well. Like I'm very proud of it, and I like it because I can look back now, and I can't remember when I started doing it a few years ago, but it's got my journey, as you say, on there, and all the challenges, and even during COVID, I'm doing tours of refurbs we're doing, and I've got my mask on and silly stuff like that. And yeah, check that out as well. I think it's Mo Haykir on YouTube, but I'll send you the link to it. And I've not posted anything for a while, but it's got some of the old stuff on there. It's got some stuff about how to raise investor finance from some talks I've done, and some stuff about the projects that we've done and things like that. So check me out on that. And again, I love doing that. It was a really good part of both getting new investors, but also updating our existing investors, because I do a site tour of a project we're on, and then I just send that link out to our existing investors that were invested in that project. So it sort of killed two birds. But it's either a massive time commitment because you've got to do everything yourself, like the editing and the thumbnails and all of that, or it's expensive because you got to pay someone else to do it. So it is I did love it. And I think maybe that's an answer to what would I do in the future? Maybe do a bit more of that, because I quite like chatting to people, and I quite like video, sort of not necessarily doing the editing, but the creative bit of what is the story in the video. Yeah.
There you go. So we've helped Mo out today. He's got some more ideas about what he's going to do when he gets his time back. Although with one small child and another on the way, mate, you're not having your time back. It's gone.
No. Going back into the trenches, got another couple of years, and then
it would be all worth it.
Yeah.
At the other side. Yeah, well, thank you so much for today. I thoroughly enjoyed chatting to you, and we'll definitely have you back on to talk some high-end HMOs in the down south region. That'd be great.
Sounds good.
Thanks Mo.
It's been good. Cheers.
Bye bye.